This week's Know Your Cash word of the week is tax. My name is Arabile Gumede, and the buck stops here.
The saying is, give unto Caesar what is Caesar's. And the other thing that you can be sure of is tax and death. So why is tax seen as this huge element of our lives? Well, what happens with tax is that we kind of pay society for allowing us to make a profit out of it. Yes, for us to have the job we have, we kind of making a profit out of the businesses that reside in the country. So why should the country not benefit? Now, tax in essence is measured in many different ways, and the government determines what the tax rate should be. Any changes to that would change tax law. Probably one of the acts that changes the most is actually the Tax Act, because the ranges for what is exempt or zero rated, all those things I will explain, is very critical and changes sometimes every 2 years, if not every year, depending on the government of the day. So what does it mean to have something zero rated, for example, or VAT free, or not have as much tax as some would think? Well, being tax exempt means that in that time, you do not have to pay tax. That does not mean you're tax exempt continuously. The whole point here is that you still need to make government aware of your finances. And your finances is not talking about your daily expenses all the time, but really just about how much you make from your employment. And in doing so, government determines whether a particular item, service, or task is then exempt or doesn't have to pay tax. Zero rated items, things like bread, are actually zero rated when it comes to tax. So that just means that a tax is charged on them, but it's at 0%. So one may ask, why is that so necessary to understand? Well, it's necessary to understand for another explanation on inflation, which we'll hopefully get to as well. But being zero rated does mean, for now, just understand that it means that that item is charged at 0%. So zero rated goods are essentially the items that South Africans need as basics in order to survive. So everything from bread right through to sanitary pads have become zero rated to ensure that South Africans can afford them and be able to apply them to their basic needs. Now, the most important tax, I suppose, is either PAYE or pay as you earn, which is how you get the PAYE, or corporate tax. Now, corporate tax is the tax that companies pay in order to fulfill the mandate of government. What do I mean? So if a company comes to South Africa in order to get some employees and make a profit, a portion of that profit needs to be given to the South African government so that it can continue to build an economy that is good enough for more companies to come to South Africa and then create more business and more employment as well. So corporate tax is always very, very important and ranges between 28 and 30% depending on what government deems necessary. It hasn't changed for some time purely because you do not want to make investors fear paying more money in an economy that isn't necessarily growing as fast as it should. South Africa isn't, unfortunately, growing at the rate that it should right now. So PAYE is also the tax that you and I then have to pay. So a company pays us money for a service that we perform, and that means that from that we receive a profit, technically. Even though it isn't really, that's what government deems it as. And for that profit we make, that salary, we need to pay a portion of that back to the country in order for the country to be able to give us things like education, like healthcare, like infrastructure, the building of stadiums, the building of roads, the building of hospitals. All of those things come from your taxes and my taxes too. So it is absolutely critical for us to be able to pay those things in order to build South Africa as a country.
For more videos like this, follow Know Your Cash on social media and download the Know Your Cash mobile app. Know Your Cash is sponsored by the South African Insurance Association and brought to you by Financial Care Corporation.